Hello everyone, welcome to our discussion for Chapter 9. We're dealing with activity-based costing. And I want to make sure that we're clear as we start here that we're really looking at a new way, not entirely new way, but a more detailed way of looking at overhead allocation. Overhead allocation, because it's an indirect cost, is always going to be an estimate. All right, this is a way to try to refine that estimate. What it doesn't do is change anything to do we deal with direct labor or direct materials. Those are still direct costs traceable to our product. So activity-based costing is about trying to do a better job of allocating overhead. Now, in practice, in the real world, this is used somewhat often, but it's used more often as an analytical tool and less often actually to make journal entries. And what I mean by that is we'll figure out how much our overhead is for a product when we are developing our what we should charge for a price on that product, or maybe a new product where we are trying to decide what the cost would be for a bid for a new customer who's asking what would it cost to make this. And therefore, we want to make sure we account for all the different activities that might go into that product. Sometimes that's not practical from an actual debit and credit standpoint, meaning we're not going to make all the extra journal entries that it's take to do that. We simply will use it as an adjustment at the end of the year, or we will just use it in a kind of a prediction standpoint, but at the end of the day we'll use regular overhead allocations for our journal entries. So I just want to point that out so that you realize that when you get out there in real life, that this is not always the way that journal entries are done, even with a company that uses activity-based costing to base their stuff on. And I really think that almost every company uses at least some part of this, even if they don't fully embrace it for journal entries or things like that. They think through this process in their head, even if it's not done formally. So here's the kind of scenario that we don't want, that bad cost allocations, we might say, can lead to. So here's a company that's from an earlier chapter, makes two products. They allocate their overhead entirely based on direct labor. And so you see here, okay, by direct labor hour. All right, and so the direct labor hours for S72 are 2,400, S66s are 3,900, and so you see there's a difference in the overhead allocated to the two products. And because of the difference in the direct labor hours, that's the only way that the overhead looks to change in this situation. And then the question is that the only reason, the only cost driver for our overhead is direct labor hours? Now, yes, it does seem like that is plausible in many cases, that we have more overhead the more direct labor hours, but does it really explain all of the difference? But as it's stated here, we didn't want to move quite yet. That's what the assumption we're making. And because of the high cost per unit, we're considering just doing away with this product, S72s, and only making S66s. You see that we make a lot more of them. Okay, so from just a pure volume standpoint. So we estimate that our overhead would be $163,800 if we stopped making our overhead would be on the S66s or the S72s. You see that in this little scenario, when we actually start breaking it down into pieces, we realize that we're not going to save that much on certain costs. For instance, supervision isn't going to change if we get rid of the S72s. The machine depreciation isn't going to disappear. The plant depreciation, some of this miscellaneous cost, only these first three are actually going to drop. Okay? So really, is the overhead being driven by making the 72s? You would argue that only 18,000 additional overhead costs were because of the S72s. That's a lot different than what we are allocating overhead to. And if we go with our plan and we get rid of the S72s and we only do the S66s, we do direct materials, direct labor, and that new estimate of overhead, we get our total cost of $348. All right, and our new unit cost, and that's this manufacturing overhead is $60 per direct labor hour, and our cost per unit will go up to $14.50 for the S66s. Why? Because now the S66s have to have all the overhead that was being allocated to S72s. Clearly not a good result. So we need to get a better feel for what it is that causes our overhead to be higher or lower. What is it about our products that drive or make the overhead higher or lower? And avoid what we refer to as the death spiral. So if we get rid of the S72s and the S66s now have to absorb more overhead, so their cost is higher than they were previous, at least from our accounting. No cost went up per se, but the cost per unit looks higher, all right? And so therefore we try to charge our customers a higher price, which makes them unwilling to buy it. And so the demand drops, and there we're back where we've got a problem again. Because now if we reduce our production, that will actually increase our fixed cost per unit. So, and we just keep going the wrong direction, having fewer and fewer units covering the same overhead, because the fixed overhead doesn't really go away. And so companies can actually just get worse and worse by trying to meet the overhead costs and charge enough to cover it, and raising their prices, which causes them not to be able to sell as much. All right, and that can end up with bankruptcy. And it's all because we really don't understand what our fixed costs do, or what our overhead costs are doing, what activities make our costs happen, our overhead costs, and that's what activity-based costing is trying to do, is start thinking about it in terms of activities. What is happening that's causing that overhead? So, as kind of a transition to activity-based costing, we'll talk about this two-stage cost allocation, which we've introduced earlier. We're going to return to this in an earlier chapter. okay, and talk about it, reiterate it, refresh it in our mind, we first allocate our overhead costs to departments. So instead of looking at overhead as one big pile of costs, we're going to break it into smaller piles with the idea that each individual pile will be better able to wrap our brain around what's happening there if we are dealing with it separate from other costs. Now, remember, these are the same overhead costs. We just put them in different piles. So don't think of it as new costs or different costs. It's the same pile of overhead costs. We've just separated them into smaller piles, sorted them into smaller piles so that we can better understand how they behave. Then once we've got them into like different smaller piles, then we can allocate each smaller pile to our products with hopefully a better understanding of how that should be allocated. So this is example. Notice direct material, direct labor, like I pointed out, happen the same way regardless, okay? We're only dealing with overhead. We've taken it and we've broken our big pile of overhead into two smaller piles, machine related and direct labor cost related, okay? Those together equal our total overhead. Breaking them into two cost pools, if you will, or smaller piles is the first stage. Then we allocate those two piles to our two products. And maybe we allocate using a different cost driver for each one. That's the idea. So we say these machine-related costs are more related to how much machinery we have or how many machine hours are being used, not based on how many people we have. Now there's still costs that the best still are driven or happen because we have more direct labor hours. So we have separated them by thinking through and being analytical about what it is that those costs are supporting. So in this new example here, okay, we've got two products, Sport and Pro, right? We've got our overhead costs broken down into two smaller piles, all right, but also added up together, so we have that total as well. And we have broken down our direct labor into a couple of processes, meaning this is the people that work in our assembly and our packaging. So it feels a little bit like process costing, where we track everything by department. Now, if we were to do this entirely based on direct labor costs, okay, so we just treat it the traditional way, we're going to take the total overhead, okay, and allocate it using the total direct labor cost. So that's here on this next slide. Where's the calculation? We take the total overhead, we divide it by the total direct labor cost, and we get 0.9 or 90%. And so when we apply overhead, we simply just need to know what our total direct labor cost is and multiply it by 0.9. Okay, it also could be based on direct labor hours or something, but the point is it's one allocation rate for all products for all overhead costs. In this second example, or notice direct material, direct labor, same. Nothing's changed in this part. But instead of allocating all the cost one way, we have our two smaller piles. and we have a predetermined overhead rate for each smaller pile. So our assembly smaller pile we determined the cost driver was machine hours. So we took our total assembly, just the assembly overhead, and we divided it by the machine hours. So 1620 divided by 36,000 machine hours equals $45 per machine hour. So that gets allocated to the Sport and Pro based on how many machine hours Sport uses and how many machine hours Pro uses. And you can see that that's a very different number. Sport, okay, uses a very small amount of machine time. And Pro uses, well, relatively a lot of machine time. It's still less than an hour, okay, but it's still considerably more than Sport. And so, all right, we're going to apply the overhead differently. And then the packaging, we're going to just use direct labor cost. So you see that cost is very similar because the direct labor cost for each of the products is similar. So again, we take the smaller budgeted pile of overhead, and we divide it by the estimated direct labor cost for our, in this case, packaging or packing, okay, part of the direct labor. So that first way we did it was a plant-wide allocation method. One cost pool, one overhead allocation rate. The second was a department. All right? We broke it down into smaller piles, 2 departments, and we used an allocation rate that's different for each one. Now, in real life, what happens? Well, the more similar your products are, the more similar the processes are that you're doing, the less sense it makes to separate it into smaller piles. So if your process is very straightforward and simple and continuous, then maybe a plant-wide allocation is fine, meaning you won't get any better information by breaking it down into pieces. But if you have a wider variety of products, okay, in terms of what resources they use, then you need to start thinking the process is a little more complex. Then you might want to break it into departments and think about what is driving those costs in each department. So that's what activity-based costing is trying to do. It's basically doing this 2-stage process, but it's focused on not necessarily departments, but on activities, what is done in that department. Now, many times it's really hard to distinguish between a department and what the activity is, because that's how we usually name the department, is the activity it does. But this is trying to get even more detailed. So we might talk about multiple activities that each happen within even a same department. So the mixing department may have a pouring activity and a mixing activity. Okay? So there may be multiple activities. So we're breaking it down into more detail, typically. And we're going to assign those costs to activities, just like we did. We're going to break our overhead into now even smaller piles, and then assign that pile of overhead to the products based on the use of that activity. So the activity is typically the cost driver. And so if a product uses more of that activity, they should get allocated more overhead. So we understand that products consume activities. Each product we want to get finished has to go through certain stages. It has to have certain things happen to it. And those activities consume resources. They use electricity. They use indirect labor. They use these resources. And we need to try to best measure. See, the underlying point of this is if we don't know what the costs are for activities, we can't manage them. So our first step in ability to actually reduce costs and to find better and more efficient ways to do our product is to understand the activities and the cost of those activities. And we talked way back in chapter 1 about value-added activities, right, versus non-value-added activities. The whole idea was trying to figure out what we need to do and eliminate those non-value. This is basically harkening back to that same idea. We start looking at activities, decide which ones are essential, which ones are not, and try to manage our costs accordingly. So we identify the activities and then assign our overhead costs to those piles, right, to those activities. Typically between 3 and 10 activities make the most sense in most automated environments. Then we have to identify the cost driver, typically some measure of that activity. And of course, we want an activity that we can measure without having to have someone just standing there counting them. That seems like a very high cost to pay somebody just to count how many times we do things. So we want to, pick a cost driver that's more easily measured. We calculate our predetermined overhead rate. That term isn't used here, but that's what we're talking about. The cost rate per cost driver, that's a predetermined overhead rate that we learned about previously. Okay? And then we assign the cost to the product based on how much of the activity they use. So if it costs $3.20 per setup and this product uses 10 setups, we're going to allocate 10 times $3.20 to that product. So a little bit about cost drivers, okay, and what that activity is, or what drives it, what makes that activity use resources. So things like setting up machines. Is it the hours you set up, or is it just how many times you set up because of the machine? Okay. Where do we find our cost drivers? And that's where we have to really get out on into the manufacturing process to understand what it is that takes our time, takes our resources. And we'll talk right at the end of this, we'll talk to present the idea of time driven, but almost everything can be measured in some form of time, whether it be machine or people time or whatever. Okay, what is it taking and what causes that extra time when we're looking at the cost driver? So this is how, and notice we're just focused on the overhead. Direct materials, direct labor, still happening the same way we've done it all along. But we have the step 1 where we've identified 4 different piles, if you will, or activities: setting up machines, handling materials, machining, actually doing it, and packaging and shipping it. And so in parentheses is our cost driver for each one of these. Now, these two both have the same cost driver, okay? So they, in some ways, they could be combined, but we can also keep them separate. And this one, machine hours. So you're going to end up with figuring out what it costs, and then, or estimating what it costs. And again, remember, a lot of estimates. We're doing this an awful lot of time before anything's happened, remember, because we're using this to try to determine the cost of new products. So we need to have this determined as we start the year, as start the month. And then we divide that by the number of setup hours. So we take the cost, we divide by the total setup hours. We get a cost per setup hour. And then for product A, we multiply that cost per setup hour times 3. And for product Z, we take 9 times the cost per setup hour. So our total overhead for product A is 3 setups times the cost per setup hour, 2 production runs times the handling materials cost per production run, and times the packing and shipping cost per production run, at 1,500 machine hours times the cost per machine hour. Add those up, that's your overhead. So when it comes time to think of cost drivers, you might benefit from an idea, this concept of cost hierarchies. Okay? Kind of where the cost is happening. So the first one is, this is based on how many products we made. It's volume related. The more products we have, okay, go through the activity, okay, the more it's going to cost. So this feels very much like it's variable, right? Okay, and so you're going to see these types of costs, and you're going to use direct labor hours, direct labor costs, machine hours, number of units as your cost driver. Okay, because these costs are related very closely to the activity of each individual product or item that's made. Then there's what becomes a little more difficult is when things are based on how many batches we make. So there are certain things you do only at the beginning of a batch. So that pile of overhead costs, the activity that drives it may be setup hours, how many production runs, how many times you get ready and run a particular product through your machines. Okay? It may be number of shipments, although that's a little harder to think about. Shipping costs could be either volume related, if each individual item is shipped, if it's shipped in a container based on entire production run, then the shipping cost would be based on production runs. Okay, so you have to understand your process. You can't do any of these without going, or at least talking to the people who are working on it on a day-to-day basis. Okay? Now, when we say product related, we're looking bigger. We're not talking about individual items. We're talking about different products. So if you think about Ford making Mustangs and F-150s, those are different products. That's a product related scenario, not how many trucks we made or how many Mustangs we made, but how many different products. That's where the design comes in, okay, and compliance costs. So any new product is going to require new designs, new compliance costs, that sort of thing. So those overhead costs, the more complexity we have in terms of number of products, the more of these product related overhead costs we're going to have. If you only make one product, you're going to have very little with regard to these overhead costs. If you make 1,000 different products, you're going to have significantly more. And of course, the more complex each individual product is, different from each other, also is going to be part of that. And then there's these costs just to have the factory open, right? Okay? And those are the hardest to really tie to a particular activity, because it's all in this, you got to have the factory up and running. You got to have the lights on, you got to have the heat on, all that kind of thing, regardless of the activities. And so it's sometimes hard. Sometimes you can use square foot. If that's an easily measured activity, it kind of indicates how much space something takes up. So a product or a part that takes up more of your facility would get more overhead than a product that takes up less of your facility. So using that with this sport and pro example, okay, we got some machine hour measures. We've got direct labor between the two departments, if you will. We got our totals. We got our overhead costs. Remember, this is the same overhead costs through all this example, just a different way of allocating it. Okay, so we've done it with a plant-wide rate. We've done it with just 2 stages. Now we're going to do it with a little bit more detail. So the assembly department has 3 activities within it. So now we're getting really smaller piles of overhead, and the packaging has 3. So each of that all those activities, we now have to separate our overhead into 6 pieces, if you will. Okay? All right, so we actually ended up with just 5. We decided to combine inspecting and packing because they were so closely related. All right, and so here is our 5 activities and the cost driver for each one of them, and how much of those cost drivers for each were used for sport and were used for pro, and the total. Okay, so we're going to take our cost, break it down into these 5 pieces. We're going to divide that cost by the total volume, and then multiply it by the number of that activity that is used for that product. Okay, so here we've broken down this is the same total overhead as we were using earlier, but now we've broken it into 5 smaller piles. The assembly pile, we divide it by the cost driver volume, 6,000 machine hours. We get a cost per machine hour of $30. $900 per setup hour, $3,000 per production run, $5 per direct labor hour, and $1,320 per shipment. So now I need to know how much sport used of this cost driver, how much pro used of this cost driver, which was on this earlier. So we already have that data. So if you don't have that data, you can't do this. So this needs to be something that is relatively easy to find in a real life setting, if you were doing this for an actual company. So we've taken and multiplied the number of the activity, the number of the cost driver, times the rates that we got previously. So our total overhead allocated to sport is $672,000, for pro $1,758,000, just adding up. Okay? So make sure you divide by the total and multiply by the amount of the cost driver used by a particular product. It's always a good idea to check after you've done your math, add these two together and make sure that it equals the total overhead you knew you had to allocate. Because if you move a decimal or do something like that, you may catch yourself that you made a mistake if these two don't add to the total overhead you started with. Okay? So, graphically, again, direct costs happen easily for each product. And then we have made much more detailed allocation of overhead so that we understand what it is about our overhead. Okay? And so, for each of these products. So now we have some concept of the activities and overhead. We can start to talk about managing those costs and finding the best, most efficient way to use some of these activities. Maybe there's ways to reduce our handling materials, but until you break down the overhead into just that and you see how it works for each product, you don't really have much to go by on trying to make that process more efficient. So here is all of our overhead costs added up, just like it was on the earlier slide. And then we have our direct costs. Nothing changed up here, folks. No direct material, direct labor, all that stayed the same. The only difference is how we allocated our overhead. So please do not forget the direct labor and direct materials or try to get fancy with those and try to do something different, because they are going to stay the same. And then we have a new unit cost when we get our total and divide it by the number of units we're making. So that would drive things like pricing decisions. What do we need to charge customers if there was new customers, or if there was a new product? We would use a similar process to figure out what that Sport 2 might cost us based on this kind of scenario. So here's your example of kind of the comparison. Okay, when we used one plant-wide rate, we got a unit product cost of 48 and 105. When we used department, just 2. Okay, so we broke it down some, but not down into 5. Okay, 41, significantly lower. Okay, and the Pro went higher, mostly because of the fact that Pro uses a lot more machine time than Sport. And then finally, we get even more shift to that when we go to the activity-based, but not a whole bunch. So that you might say, okay, we don't really need to do all of the activities to get a better feel. Maybe just the department rate was fine. Okay? So activity-based costing is more involved, takes more effort, more time. And so we have to wonder if our getting better information is worth that extra time. Okay? Will we get insights? Will we have understanding about how to manage those costs better if we break it down into more detail like that? So, T account time, okay? Materials inventory, just like we always have, goes to our work in process. All right? Notice that they have broken down our work in process for assembly between our two products. So literally we're developing a T account for each product to try to track our unit cost per product. So our direct materials happen the same way we've been used to. Wages payable goes right into the work in process as direct labor as well. Nothing's changed about that. Overhead costs. So we have our overhead costs, all right, broken down into our various activities, right? And we track our overhead costs by activity, each with a T account, and then we allocate it by crediting that T account and debiting our work in process for each product. You could make one journal entry to do all of the different overheads into the account for the product, or you could do each overhead, each activity overhead separately. Probably easier to remember if you do each one separately, so you make sure that you didn't forget any of your activities. Okay, and then moves from assembly into packaging. Okay, after we're done with that department, all right, where there would be the additional overhead and other costs that go into it. Okay, can we apply this steps to not manufacturing but just the rest of our business? Okay, can we apply activity-based costing ideas to payroll or to human resources or to some other pieces? And the answer is yes, we can if we just think a little more creatively. Okay, identify the activities, cost drivers, figure out the rate, okay, and then look at how much each of that steps consume in terms of that activity. Now, why is this for everybody? Should every manufacturer, every business be using activity-based costing? Okay. It is more expensive. It is more difficult. And it can be misleading if it's not done correctly. So some people would say a bad activity-based costing is worse than just traditional. A good one is better, but a bad one is worse. So if you're going to do it, you need to do it and keep it up and think it through. And as your manufacturing changes, you need to update it. Okay. As we mentioned, some folks will use activities entirely based on time. We're going to do a discussion board about this concept a little bit, about breaking down all of the activities based just on how much time it takes. That's very appropriate for most things that have to do with people or machines, and the time is the best way to kind of measure the activity.